Canada's market when it comes to pre-sales, to say it lightly, has been volatile. Let's be honest. From the insanity of the lineups in 2020, all the way to 2022, to empty condos all over the country in 2024, the pre-sale market is definitely not boring. Here's the thing, because of the extreme highs and the extreme lows, a lot of people have just completely shied away from pre-sale properties, which may also not be the right move depending on your situation. So let's break down, should you still buy a pre-sale property in 2025, and does it even make any sense in this current economic climate? So let's take a look at this. In 2025, one of the biggest things that we're starting to see already is a decline in overall pre-sale properties. If you don't know this already, a pre-sale property is one that is not built yet. You're typically purchasing it before there's a shovel in the ground, and heck, it might not even have been cleared yet for you to buy the property, but you're usually putting a deposit in place for a future property. Now, if it's a low-rise property, it's usually only going to be about 12 to 24 months away from the property being built from the time that you put down the deposit. If it is a high-rise, it could be anywhere between 3 to 7 years from that time that you can be put it in place. But here's the thing this year, pre-sales had a really bad rap in 2024, and that might even continue in 2025. So we're seeing lower than usual deposits in the marketplace. And the reality of that is the marketplace itself is dictating that those pre-sale purchases that were in 2020, 21, and particularly 2022 were massively overvalued. And those investors and people that were purchasing properties with the idea or the attempt to be able to not only potentially flip those properties, but maybe even just see equity gains as soon as they bought it, ended up not being right. The marketplace took a dive, the BOC increased rates, and we're in a place right now today where not only are people having to come up with extra money to close on those properties because the value is less than what they agreed on, but on top of that, they're seeing people let go of properties left, right, and center and losing deposits because they can't close. Notwithstanding the fact that we're seeing thousands of empty rental properties all across the country because people can't rent them out for anywhere near what they thought they were going to rent for. Suffice to say, the market has changed significantly. Take this stat, for example. Vancouver's housing inventory overall has increased 39% year over year as of July 2024, which is surpassing the 10-year average. Now, that's not all pre-sale properties, but when you consider the sheer amount of pre-sales that are being complete in 2024 and 2025, that number is likely to increase. Overall, national price trends, as predicted from CREA, Canada's Real Estate Association, and a few of the other real estate agencies, were suggesting single-family homes to go up by as much as 7.5% in 2025, and condos only to go up around 3%. And a large part of that was the amount of inventory that was about to flood the marketplace. But here's another thing to keep in mind. This is also regional. Marketplaces like Toronto have been exceptionally unique and one of only a few different municipalities and cities across the country that are seeing these crazy increases and fluctuations in condos, in part because people were buying these high-rise buildings. And you're not building high-rises in all cities. There's other areas in the country, like let's say, for example, Edmonton, that are not experiencing any of these issues and in fact are actually still seeing a lower amount of inventory and seeing that is a seller's market all the way into 2025. So here's the question that people are asking, like, should I even buy a pre-sale property going into 2025? My honest feedback on that is that it really depends. And people hate hearing that, but here's a few things to think about. Let's talk about, first and foremost, market shifts and dynamics. So if we're looking at 2025 in the marketplace, from the end of 2024 into the 2025 marketplace, one of the big things about the pre-sale property market that's very different from even a few years ago is concessions and discounts. The marketplace itself for pre-sales is getting more and more competitive, and we're seeing more of the developers and marketing agencies offer better discounts, better credits, and they're also offering additional incentives just to purchase a pre-sale property. Now, the benefit of a pre-sale in general is always that you can push the dates out. So you can buy that property today and you close on it in a year, 2 years, 3, 4, 5 years from now. And if you could purchase a property in a pre-sale tower or building or low rise in an area that you want to be, and in addition to that, purchase that pre-sale at a today market value comparable or very similar to what a square footage would be for a similar unit today, then there's a lot of merits to considering a potential pre-sale property. Notwithstanding this major fact, the reality of the pre-sale market today is that people aren't buying because of what happened today, but it's a reflection of what happened 3-4 years ago, fueled by lower interest rates. However, if you look at record low amounts of builds, there could be a possibility that in 2 or 3 years, maybe 4 years, that we actually have the opposite effect occurring, because pre-sale developers, they actually need the deposits from these properties to be able to construct. So a lot of these developers are just sitting on land and not actually developing because they don't have the cash to do it. So if you were someone buying a pre-sale property today, there's a very, very real possibility that by the time this thing is actually built, it'll actually be worth, well, potentially more money depending on what happens in the marketplace, but most likely around the same, especially if you get a smart buy today. If you're buying a pre-sale property, you need to be thinking of a few things if you're getting into it in 2025. We talked about the financial considerations like the rebates and different types of concessions that might be available for you. You should bargain hard, but you need to be looking at things like the square footage, and you also need to have a clear understanding of the OCP and what's happening around you, the geographical range of that property you're buying. Are they developing in different areas around you? Are there schools? What type of people are showing up there? Is this a place that you want to live? If it's an investment, what's happening in that area? Because that can heavily dictate rents, that can dictate what you're paying, that can dictate the value of the property. So you need to be smart about making that decision in any time, particularly today. As it relates to financing pre-sales, well, this is the perfect indication in 2024, 2025 of what can happen if the market flip-flops. Even if you put down 20% on a pre-sale property based on a market price of, let's say, $500,000, if at the time that you purchase that property, if it's worth to an appraiser $450,000, that means that that $100,000 that you went down, which is great, is going to go against a $450,000 purchase price. And because you can only borrow up to 5% of the market value of your home, you actually have to come up with the difference in cash, which means if you purchased a property for $500 and it was appraised at $450 and you did 20% down, well, the bank's going to lend you $360,000. Which means you have a $40,000 difference in cash that you need to come up with for closing. That's if the market value of the property is lower when you close. Now, the opposite can occur. You could have a property, you purchase it for $500 and now it's worth $550,000 and you have instant equity. Now, not all lenders will let you access that equity instantly, but you could have the possibility of selling it or just knowing that you have equity pre-built in the property that you purchased. One of the good things about pre-sale properties as well, depending on which province that you're in, is that lenders will offer usually incentives and rebates on taxes to be able to purchase those properties. So in BC, for example, there's a land transfer tax. Unless you're a first-time buyer, you have to pay this entire tax, which is 1% on the first 200 and 2% on the difference. But recently it's been raised to over $1 million. So if you're purchasing a property up to 1.1 million and there's a higher exemption for a small rebate, you can actually be exempt for the entire amount. And a lot of people don't take that into consideration. But if you're buying this home for $1.1 million and you're exempt from the transfer taxes, which is about $20,000, that's a pretty significant savings. Now, you can't forget though that when you're buying a new property, you still have to pay GST. So if you buy it for 1.1, it's actually not 1.1, it's 1.1 plus the $55,000 of GST, $1,050,000, and that is an important consideration that a lot of people miss out on. But let's cut to the chase. The question really is, could you and should you buy a pre-sale property in 2025 in this current market and current climate? And the reality is you need to look at a few things. Economic conditions. Right now, I'd be looking at specifically how many starts are we seeing in any particular area, specifically the cities and demographics that you're looking at, not just nationally, not just provincially, but city. How many shovels are going in the ground in the area that you're purchasing? The second thing you need to be looking at is, do you have a backup plan, financially speaking, in case this property was undervalued? Do you have a backup plan in case the rent didn't go up to the way that you were hoping for? Or if you're going to be living in this property, do you have a situation to set yourself up for success if one of those things happened, or if the property was inevitably delayed, which, let's be honest, they all are delayed. One of the things that I would look at is if you're trying to use this from a financial perspective, which it is your home, but it is also one of your biggest assets, is look at the potential equity gain or loss by not getting into a property today. With the predictions of properties going up and appreciating depending on what you're buying today by as much as 12% over the next 2 to 3 years, there's a serious consideration to say that you should look at buying a resale property today depending on the type of property and the market, so that you can actually benefit from paying down your mortgage and building up that equity immediately if you can get into the marketplace at this time today. From there, you can consider the possibility of leveraging, but there are those immediate benefits. The second thing is what type of property that you're looking at. So if I'm considering buying a property in 2025, I might look at the reality of what type of home I'm buying. And if I really wanted to get myself into a single family home and I was on the cusp, that's what I would be buying right now, which is a single family home as opposed to a brand new pre-sale condo or brand new townhome or something of that nature. Because the thing is this, they're not making any more land. We all know that, but single family homes are going sparse and they are becoming a luxury item in almost all cities and all communities. And with the market suggesting that single family homes and land are going to appreciate at a greater and higher rate than what we're seeing out of any condo or attached property, that's another consideration, notwithstanding the fact that the government's supporting initiatives to be able to do 90% refinances, to be able to add basement suites. They're using land to offer infill opportunities. There's redevelopment opportunities in these properties. The thing is, if you can make it there, that's a consideration. So with experts predicting that with a low amount of building in 2025, 2026 and 2027 specifically could end up shaping out to be a good play as it relates to purchasing presale properties. But remember this, a presale property is only as good as the purchase and the deal that you get on the day that you buy it.